Hello, everyone. How are you doing today? This is Danielle. Welcome to the close. Thank you. Thank you. Looking forward to trading the close with you today. All right. So I just want to start off by asking if anybody has any requests. And I will make sure that I get to those over the course of the session. Thoughts on TTD, EXPE. Okay, great. I'll put those ones in there. S&P, SPX. Looks like we're getting a nice little bounce off of the lows of the day. I'm looking at the NVIDIA low compression squeeze, SoFi, AVGO, thoughts on Rocket Lab for earnings, also CORZ. I'll pass on my SoFi question to you. Your take on the daily high compression squeeze on SoFi. Got out a few weeks ago looking for the next entry, long, possibly leaps. What are you doing for earnings on TEM, NVIDIA multiple timeframes? Okay, great. This is a great starting point. So let's just start off with the NASDAQ. First of all, I mean, I like the NASDAQ daily squeeze here. I think that, we have a pretty nice bullish pattern that's forming. We have this nice little cup and handle rounding bottom with the daily squeeze. So far, we haven't seen volume come in, but all we really need is just a nice little volume and momentum push. Today, we're just a little bit flat, down 0.06%. If you look at the lower time frame charts, we have had a little bit of a pullback here today, but again, overall, the price is about flat because we had this rally during the overnight session. If you look at the S&P, same thing, a little bit of a pullback, a little bit more than the NASDAQ. But overall, looking at the long-term trend and price pattern, I would say it looks pretty bullish here. Again, we have this nice cup and handle pattern that's forming. We have this bullish daily squeeze, and we don't have the incoming volume yet, but that's what we need for it to break out. So just a little bit of consolidation, which I think is eventually going to break out in the direction of the trend. Currently in the S&P futures, we're trading right around 63.50. So let's look at SPX and see if there's anything to be done there. I think overall, 6,400 is definitely the next price target. And then after that, you're looking at 64.85 and then 6,500. If you look at lower time frame charts, I mean, we're basically just right in between these key psychological values. So for an end of day trade, 63.50 or 6,300 are going to be the major high open interest targets that I bet we will see if we look at the options chain. But we just don't really have a whole lot of movement here. If you go down to the lower time frame charts and check out the market internals, what I have right now, as far as the ticks are concerned, is just trade on both sides of the market. So in order to make a directional move, you really need to have, consistent buying or selling in one direction or another. And when you're between plus 600 and negative 600 and the ticks are demonstrating buying pressure, then selling pressure, then buying pressure, then selling pressure, and there's just no consistency in one direction or another, typically that's going to be a neutral trade going into the close. But it's still a little bit early for me because I like to do my day trades the second half hour of the cash session. So we'll see if the ticks pick up in one direction or another. I never like to short the lows on the day. So I would guess as of now, a trade in the SPX down into 6,300 is probably not the way that I would call it, but it all depends on what the buying and selling pressure is doing the second half hour. So if we are seeing negative 600, negative 800, negative 900 on the ticks, then that would be a situation where we would go out on the lows of the day. But if we start getting a ripper here at the end of the day, SPX 63.50 is what would be in focus for me. So right now, I mean, you're just not really getting a whole lot of anything. The vol spread is just a little bit back and forth. The put call ratio is low again. It's back down into 0.6. So when you're looking at that, it's kind of like, well, people are long. People got long when that market pulled back. So is there enough volume buying that can come in? If you look at the VIX, it's still pretty low, 17. So we're still in a pretty consistent market here. Um, and one that is just not extremely volatile. So I wanted to just start off by closing my app trade. This is a trade that I did yesterday here in the trading room. Now, you could argue, like, why do you need to close it? Because it's at basically 100% profit. But the reason why I want to close it is because you just never know what can happen. You hate to have like 100% winner just disappear if the thing gaps down and rolls tomorrow. I will say that overall, the app chart pattern looks great. Really nothing to complain about. If you look at the earnings hot zone, which is what we use to place this trade, what you will see is that this stock was just extremely consistent and has gapped up after earnings literally every single quarter for the last 8 quarters in a row, and then today being 9. What's interesting about this move is that the initial gap says it was only 1.7%, but then after that, you've just had buyers continue to come in. So it's up 11% after the initial 1% move. So that's pretty big. Anytime you have buyers coming in and pushing up a stock after an earnings report, that's definitely something that you want to look at and watch. It's a really bullish sign for long-term growth and just for a continued trade to the upside. So anyways, sometimes when these stocks have these big moves, it can give it back the next day. But honestly, looking at this chart pattern right here, and then also the stats, do you notice how the earnings hot zone is saying in the post earnings 8 days, on average, this stock is up another 22%? I mean, that's just crazy. So that's just basically saying that after the earnings move, in that 8-day time frame over the last 9 quarters, that's the average move. So I would say that that one's actually a good candidate for a post earnings move too. I don't know that I want to put another trade on it, but you might be able to talk me into it because it does have the daily squeeze. It does have the big gap up. The only thing I don't like is obviously it's already up 11%. So not a huge edge on entry here, but I am noticing this key psychological value at 450 and then this other key psychological value at 500 as well. So, you know, you may be able to convince me to at least throw like a butterfly on it or something like that. Danielle, so worried it traded down after earnings and yesterday's aftermarket. Yeah, it's pretty crazy how it can do that sometimes. And then just rally like that. You closed app for 5 cents already. Thank you for that one. Awesome. So I'm just going to go ahead and, like I said, I'm just going to close it because it will probably expire worthless tomorrow, but it's just the worst when you um, leave a trade on like that and then it completely reverses and your profit disappears. To close, taking almost 100% profits on this earnings trade. Okay, so if there's anything else to do with it, I mean, I feel like a butterfly into the 450 price point could be a good trade. This would just be an overnight trade and it would be based off of the 15-minute squeeze. So the idea here would be, okay, this thing already had this big move after earnings. It has another bullish setup, another bullish price pattern. We have high open interest in the options market. That creates a target, especially for an expiration Friday. So is there a cheap way to get involved? Just checking this out for kind of like a post earnings move. You could do like 440, 450, 460. I mean, that's only going for $1.30. If we make it $15 wide instead, that's $3.13. So I feel like that's a pretty decent post earnings trade. It's supported by the stats. There's some really good momentum. There's a 15-minute squeeze at the end of the day. It's definitely an aggressive trade. It's already up 11%, So can't say that you have a great edge on your entry. But I think overall, it's a pretty decent idea. I think I'm going to come back to it a little bit closer towards the end of the session and just see how many other trades that I find, because this one would be one of the more aggressive ones. Let me also just double check the short float on that one. 4.6%. So, you have some short float there. But overall, I like that one. I'm glad that one worked out. So let's go ahead and start going through all of your requests. I'm going to start with SMH and NVIDIA because I saw multiple requests on NVIDIA. First of all, I'll just start with SMH. We have multiple squeezes on various time frames in SMH. Typically, whenever you have multiple squeezes in SMH and also in NVIDIA, and then I also got a request about AVGO, that's a pretty good sign. Now, this to me looks like a bullish daily squeeze. The question was, how do you know which direction the squeeze will fire? So, how you know which direction the squeeze will fire is a combination of factors. And I will always point out that number one, we never ever know for sure. But what we do is we're going to overlap it with the trend. We're going to overlap with our earnings analysis. We're going to look for any other additional chart patterns. And then we just want to look for as much confluence as possible. And that's going to help us pick the best squeezes. So if you look at this squeeze, don't love the orange dot, but there is starting to be a little bit of incoming volume. You definitely want to follow volume and momentum. So if volume is starting to shift and starting to pick up to the buy side, then that's, for me, one of my biggest hints that it's going to fire to the upside. But overall, I'm going to bet on the squeeze in the direction of the trend, so long as the momentum is shifting higher and the volume is shifting higher. And if there's any other bullish catalysts as well, like earnings, that's going to give me some really good fundamental backing. So if you look at NVIDIA, I will point out that NVIDIA has earnings at the end of the month. So, and so does Broadcom also. So these stocks are in their run into earnings timeframe. Now, NVIDIA is already halfway through this earnings hot zone timeframe. Right here, this is the beginning of the run into earnings timeframe. That's when the implied volatility in the options starts going higher. So that's why I put this line on the chart right there. So anyways, when you're looking at this earnings report and you're looking at the stock, I mean, you have a gap up last quarter, gap up the quarter before, which was interesting because it ended up rolling. But we have, looks like 7 out of 8 quarters where it beat earnings estimates. And then if you look at these bubbles, it's pretty much always up after earnings. Yes, there were 2 quarters, one time here where it wasn't up. This quarter, I mean, I wouldn't even count that. It was down by 9 cents. So overall, I would say the stock gaps up after earnings. It also rallies pretty well going into earnings as well. Now, I also noticed something here, which is a key psychological value. We traded up into 183, and that is really close to that $200 price target. So another thing that can be helpful with these kind of stocks is those key psychological values and price targets. So if we throw on a Fibonacci level, you'll notice that the price targets that are projected are going to be 186 and then 190. So that's going to be pretty close to that $200 a share. That's the price target that I've been eyeing for a while, because if you look at NVIDIA on a weekly chart, the price targets from that are actually right up at 200. So, I mean, I like the idea of trading NVIDIA to the upside. I like the idea of the run into earnings working out. I can't say that there is a great edge getting in right here just because it made a new all-time high today. So that, that is going to impact your edge. But the fact of the matter is this thing has just continued to go higher, go higher, go higher, go higher. And if you waited for a decent pullback, you would just never be involved. So I think at this point, Trading the 195-minute squeeze up into 190 makes sense. You could probably even scrape out 195. The question is just how would you do it? So next week is an options expiration week, and it has an $8 expected move into that time frame. What you'll notice is that there's just this massive open interest at the 185 strike. So I feel like a trade into 185 next week would make sense. You could do something like the 180, 185, 190 call butterfly. And then that way you would be targeting this high open interest value right here. If you go to the next series, that's when you have an $11 expected move. And that, I believe, would be the series right before earnings, because let me see. Yeah, so the earnings report's on the 27th. So if you did a trade going into the 190 strike price the week before earnings, you could do 180, 190, 200. I think this is a good trade. It's a good way to trade it. It's cheap. It's only $2.47 per contract. It's $10 wide. So the max you could close it for would be $10. You have a relative strength trending stock with a 195-minute squeeze that has earnings coming up. The only thing that you don't have is a decent pullback to get in. But like I said, identifying a pullback to get in on something like NVIDIA is going to be not very easy to do because it just hasn't pulled back. It's just been sitting there right on the 8 EMA for months. So I like that one. Let me look at Broadcom too before I do anything here. Let's see. So Broadcom just entered the run into earnings timeframe 3 days ago. So this one you have a little bit more time on for an actual run into earnings. If you look at the earnings stats, you will see that over 21 days, on average, it's up 5.79% during this time frame. And then during the 8-day time frame, it's up 3.63%. So, you have that on your side. You also have the squeeze, and then you have the trend as well. Now, is it possible that the squeeze fires to the downside? Yeah, it's possible. But, you're looking at the squeeze in the context of the trend. You're overlapping that with your overall earnings analysis, and you're just trying to make an educated decision based off of this whole confluence of factors, right? So overall, those are the things that I'm looking at. Let me look at Broadcom. Basically, what I like to do is I always just like to look at a couple different trade ideas, the top tickers I'm looking at, because I want to figure out, which ones are my favorites to actually place my trades. Now, looking at this daily chart, let's see here. Again, this made new highs today, so it's like not great for an entry, but it broke through that $300 key area of resistance, which is awesome. It has a 195-minute squeeze. Looks like it has a 78-minute squeeze. It's kind of coming back. And then I think the earnings report on this is going to be the first week of September. Yeah, so September 4th. So if you wanted to do like long calls in the first week of September, you could try to capitalize on the increase in implied volatility plus the increase in price going into that earnings report. You have a $34 expected move into that time frame, and I was going to give you a price target of 320. So I think that aligns well. If you look at this series right here, these are going to be pretty expensive as far as options are concerned. This $300 strike price is going for $17.90. And if you have a 320 price target, it's kind of like, well, could you make a couple dollars on it? Depends how much the implied volatility increases. But that's why I'm generally going to stick with a butterfly or a spread the week before earnings, so that I don't have to pay that like juiced up options premium. So if I was going to place a butterfly, I mean, I would use the 320 strike price. I think that that's going to be the easy target. But I will note that there is some higher open interest at the 325 and 330. So there's something to be said for giving yourself a little bit more room. So you could do something like this where you say, hey, you know what? I'm going to create a net. And I think that Broadcom is going to trade between $300 and $325. So I'm going to set up a butterfly where I can capture that move. And so basically, the butterfly is going to reduce your cost basis significantly because those long calls at the money were $18. And if you instead structure the butterfly so that your center strike is at your price target anyway, you're collecting premium from selling that center strike and it brings your cost basis down. So I would prefer this personally. It has a lot less risk, $6.30 per contract instead of 18. It would expire the week before earnings, but that would give you time to trade this going into earnings. So I like all these ideas. I think you guys have come up with some really good ideas today. How do you pick out the short float? Yeah, so you can just use like a free tool like FinViz. Why do you trade NVIDIA the week before earnings? So the reason for this is because with any of these tickers that are going higher into earnings, you don't want to place a butterfly or a spread in the same series as earnings, because with the butterfly, you're trying to make money not just on the long call, but also on the short call. And so with that short call, you need that short call to decay over time, because that's how you make money when you sell that strike. And if you do the butterfly in the earnings series, what happens is the implied volatility goes up and up and up and up directly into that earnings report. And then the short strike does not work in your favor because the short strike gains in value rather than going down in value. So if you want to use a butterfly instead of a long call, it can't be in the earnings series. It has to be the week before. If the market pulls back to the end of August, even if earnings stay positive, how you trade that, safer to use a butterfly. I mean, I pretty much always use butterflies. The short float stocks, I've been doing a lot of long calls, because those are the most likely to just kind of explode and just keep going. But as far as, trying to trade like a pullback, you just have to price out what you're willing to pay for the puts. I stopped hedging a long time ago. The reason for that is just because if you always have hedges on, you're going to be losing money on, a regular basis in a bullish market. I don't consider this a hedge. I would consider that, hey guys, let's shift to shorting the market instead of, being long during this time frame. Yeah, for sure. I had shorts on and stuff like that. But in a bullish trend like this, that's so strong with this bullish squeeze, I just personally don't see a reason to have a hedge on here. If that overall trend shifted, then yeah, I would, start trading it to the downside. But that is just kind of how I do things. If you really wanted to have a hedge on, typically what I do in that case is I structure a butterfly down at support. So in this case, it's just a little tricky because look, this pattern has been so strong. I mean, you've only tapped the 21 EMA once right here ever since, the April lows. And this one time right here, you came down to the 34 EMA. So it's like if you had a hedge on this entire time, you would just be losing money, losing money, losing money, losing money. And then maybe that one day, maybe you could have made money on it. So I don't know. If you really want to have one on, you can go out into the end of August and you could place a butterfly either down at the 34 EMA or the 21 EMA. So that would be at 560 or 554. A much deeper level would be 550. And you could just place like an out of the money butterfly with a target at that zone into the end of August. All right, so let me start going through a lot of these other requests, and then I'm still going to decide what trades I'm going to put on. SoFi. So this one looks good. I mean, the payment space is good. I'll tell you guys, so I'm going to go to the Great Wolf Lodge next week. And I was looking for tickets for that, right, for my kids. And then, of course, it comes up on my Facebook ads, literally a Facebook ad, Affirm plus Great Wolf Lodge. Like they're literally advertising that now. Because everybody's just using these buy now, pay laters. This is just a hot space right now. With the cost of everything that have increased so much, these kinds of tickers are just they're doing really well and they're capitalizing off of that. So if you look at SoFi, I don't love that it has the orange squeeze, but I mean, I do like this space overall. Oh my gosh, you can see this. Even I try to go to FinViz now and it's like full of Great Wolf Lodge advertisements. Come on. So let's see. SoFi. Can't get away. All right. So yeah, buy now, pay later is very terrible for people in general. Okay. So the short float on SoFi is 11.48%. And then let's look at Affirm. Affirm is 5.58%. So, I mean, I like it. I think it looks good. I think at the very minimum, you could just sell some put credit spreads. So the upside price target, I mean, I would say is 25, 26. But I think it looks good. Bullish price patterns. Team weekly looks worse than LLY. Yeah, I'm going to have to get going a little bit faster here. Team or TWLO for earnings. CELH target. What stop loss do I use? So it just, as far as the stop losses are concerned, it just depends what kind of trade I'm doing. If it's like a longer term swing trade, then I usually have a 50% stop on the debit. So if I'm, if I spend $1,000, my stop is a 500% loss. But a lot of the trades that I do, I can't really have a stop. So I just risk the debit paid. The earnings trades, like you can't have a stop on those because it's either going to work or it's not. So you just have to position size to your stop. For a long-term entry on SoFi for leaps, I mean, it's just one of these things where it's like, is it a good entry? No. Is it going to keep going higher? It definitely could, because it has that short float. It's right near those previous highs. It is only a $21 stock. Could it trade up into $30? I mean, yes, it could definitely trade up into $30, and then it would be a 50% increase, right? The best entries for long-term stocks are going to be the monthly and weekly squeezes by far. This is the absolute best way that I have grown my long-term stock portfolio, is literally just coming in, buying stuff that's in a weekly squeeze. Weekly squeeze, buy it there. weekly squeeze, buy it here. So right here, is it a good entry? I mean, no, but you might have to wait forever for it to go back into a weekly squeeze, because these are like gifts that, like, here's one in Walmart. The weekly squeeze is a gift that just keeps on giving. So here was a weekly squeeze on Walmart, boom. Here was a weekly squeeze on Walmart, boom. Here was a weekly squeeze on Walmart, boom. Here's a weekly squeeze on Walmart, boom. So from a weekly standpoint, um, it's, it looked great right here. Could you still add it here and make money? Yeah. I mean, same thing with SoFi, right? When I'm buying long-term stocks, I'm not that concerned about the exact entry, because especially something with SoFi, it's like it has high short interest. It's only a $20 stock. Who cares if you get the entry at 17 or 21 and it trades to 35? Like, is it going to make that much of a difference? I mean, sure it does, but on a long-term basis. So in a perfect world, for long-term leaps or stocks, you can use the weekly and monthly chart, buy it when it's at like the 21 or 34 EMA. But you just have to remember, with short squeezes in particular, if they break to a new high, that's where they explode. So I will make some exceptions with short squeezes. Walmart in particular, next target is 112 and then 120. If you look at the daily chart, you can see that it's already had a pretty good rally going into earnings. Your next target on the shorter term time frame is going to be 105. I don't think there's anything I can do with it here. I mean, Walmart and SoFi are going to be different. SoFi has high short float. Walmart is just Walmart. It's not going to hit the high and bust through it 20%. Like, it's just not going to. So, great long-term stock pick. I have it in some of my portfolios. I'm going to keep holding it. I don't see an options trade on it right here. Costco just opened their warehouses for longer time frames, which I think will be great for earnings. 2 more hours a day that people can spend money there. I think that the long-term chart in Costco looks great. I don't see how I could trade it right now in the options market. But again, this is when I buy those long-term positions, when you have that weekly consolidation and it's hovering right around these key support zones. So I think ultimately Costco is going to trade up into about 1,200 a share. They pay nice dividends. They recently increased their dividends. They have this amazing long-term chart pattern. The last time I was buying a lot of Costco shares was in here during this last weekly squeeze. And, it's just been on fire ever since. And you can see that now it's doing the same thing again. And I think it's going to make another big move. But I just really don't see anything I can do with it in the options market right here. It's because it has that weekly squeeze. The pattern is just really sloppy on the daily chart. I guess if you really wanted to, you could trade it back down into 950, but I just don't think that's a high probability place to focus. Hasbro, this chart pattern looks really good. Nice slingshot squeeze. So you can see that the momentum shifted lower. Momentum and volume shifted lower like this, and that looks like it's ready to go. The volume's coming into it, which is good. Let's look at the weekly chart pattern. So there's definitely a lot of overhead resistance in this stock, but you could probably still trade that daily squeeze. Let's see what the price target would be. Up into 80, 82. All right, let's go back to the SPX. Looks like the iron fly at 62.25 would have been just decaying and decaying. What about the chip tariff that goes into effect tomorrow? Every single chip tariff news has been a buying opportunity, like every single time. So I'm not that concerned about it. I just feel like I just feel like it's not that big of a deal. I don't know. I mean, every single time that the news has come out and people have kind of panicked over it, and then we just end up seeing stocks go higher. We go 2 times a year and we love it with 4 kids. Oh, are you talking about Great Wolf Lodge? I'm looking forward to going. I haven't gone yet. My aunt took my son a couple years ago and he loved it. And so now I'm going to go with all of the kids. Do you have a WhatsApp group link? No, I do not. But there are a lot of scammers that pretend to be me and say that they have WhatsApp, and it is not me. You got 2 call contracts for AMD earnings and got cooked. I wonder what I did wrong. Yeah, we can go over that one. So basically for long calls over earnings, it's a rare situation that it's going to work unless the stock gaps up like 20%. So in the options market, you have to look at what the expected move is and what's being priced in. And a lot of these stocks right now, they just have really high expected moves over earnings, and the implied volatility is really high. And so unless they have an extreme move, you're not going to make money on your long calls because the long calls get crushed by theta decay. Now, I will say that I'm a little sad that I sold my long calls on NBIS yesterday because, like I said, statistically speaking, it's not very likely to work over earnings, but this was of course, one time that it gapped up like 20% overnight. So long shares definitely would have worked. Okay, it looks like this long is coming in now in the SPX. Might be able to do 63.50 in the SPX 0 DTE. Come on, you can do it. We just need the ticks to go back up into plus 600 again and stay up there. So anyways, as far as long calls over earnings, it's just not very frequent for that to work. But it will work in some rare situations like this one where it's up like 20% overnight. The next target on app, this one's starting to go, so I think we can get back into this one too. 15-minute squeeze overnight. So for this one, what I was looking for is just an overnight trade for options expiration Friday going into the $450 price point. These overnight trades are going to be more risky. This is just because you only have one day. So it's going to work or it's not going to work. Like that's the situation. But I like doing these overnight 15-minute squeezes, especially on something that has, positive stats and whatnot. So you can just basically look at, all right, how wide do you want to make it? You can make it $5 or you can make it $15 wide. You can make it $10 wide. I wouldn't make it tighter than that. It just depends how much risk you want to have on the trade. But I feel like just doing one of these for $3.53 is pretty good risk parameters. Oh man, come on. It's going up. It's going up. 420. 425. You guys are buying it, aren't you? Anyways, 425 is still not bad for $15 wide. 1 to 3 risk reward ratio on it. You could also, which would be a safer bet, just sell the 435 put credit spreads. Or you could also go out another week and give yourself more time. So let me see if I can get a fill on this. Oh, well, there we go. Already filled. So this trade has no stop because it's overnight. Dell has earnings at the end of the month. Okay, and then let me know if I missed any of your tickers, possible earnings trades. I mean, I'll tell you that the earnings for today, they just didn't really strike me as anything too high probability. I will take a look, but the thing about earnings is you need to have a pattern. So let me know if I missed any of your questions and I will circle back to those. And then as far as the SPX today, it only has an $8.38 expected move. So I don't think 63.50 is going to be in play. I was hoping that we would get some buying pressure going into the end of the day and then we could trade it up into 63.50, but we're just not seeing anything. The ticks are just flat. It started to go. We had like a one tick wonder here where it came up into plus 500 and then it just womp womp rolled. Nothing happening at all. So I was hoping that I could get on a 63.50 butterfly. I mean, it's trying. Come on. Plus 300 on the ticks. That's just not going to be enough to send the market higher to that extent. Could you get 63.40? You might be able to get 63.40 out of it. Let me just see if there's any squeezes or anything. "15-minute squeeze, it's starting to form." I mean, you can see that it's reversing, right? Like it's trying to reverse. Just give me a little bit of juice here. You at least have a 5-minute squeeze. It's trying to go. Nothing on the 30-minute chart. Nothing on the 78-minute chart. Let's look at some of these Mag 7 names. Microsoft. We had a question about Microsoft into the end of the year. PLTR. So Microsoft is like one of my absolute favorite stocks. I'm a little bummed that we're not getting a direct explosion after the earnings report. I mean, as far as like a continued explosion, obviously you did get that initial explosion up in here. Microsoft does historically trade higher in the 8 days post earnings, but apparently after this massive move, it was just too much for it to handle. So if you look at the longer term chart pattern in this name, the main thing about this stock was the weekly and the monthly squeeze. So this was a weekly slingshot squeeze where it was compressed and it did initially fire to the downside, but then it just basically flipped around and we saw just major volume coming into the stock. And a lot of that happened around earnings last quarter. If we look at the monthly chart, this was the cash money signal. These monthly squeezes are just like the absolute best signals for long-term stock picks. And it's already made both targets. So it's already traded up into 501. It's already traded up into 544. The next long-term target is going to be 600. And then after that, 668. The question is, can it keep going higher from here? It's kind of one of those things where it's like, well, I would have expected it to go higher directly after earnings if it was going to. And it's kind of pulling back after earnings. So I think at this point, we're just going to need to wait until it consolidates some more and then it takes off again. Because a lot of the times after these big moves, which is what it had, it can consolidate for weeks. So that may be what we're looking for in Microsoft, but ultimately, this is one of my favorite long-term tickers, and I'm just still going to hold it. All right, SPX is definitely trading higher here. Come on, let's go. Plus 442 on the ticks. 498. We just need to get up into plus 600. 6,400 is definitely a major price target and key psychological value. I think if you really want to try the 6,350, you can. It's just not really in range, and we're not getting perfect signals here. Okay, Tesla. I mean, Tesla's been a huge pain. Ultimately, someday, somewhere, it's going to break out. This is kind of just why I'm glad I just own the shares in it. I think it's been a huge pain on a short-term basis to try to trade in the options market because it has this weekly squeeze. It's just consolidating, trading back and forth for weeks and weeks on end. Ultimately, it's going to break out. I think it's going to hit 400, then up into 450. I don't know when it's going to happen. But I don't think there's anything to do with it on a short-term options basis. For PLTR, this has been just absolutely phenomenal. This is a post-earnings move. So let me bring up my earnings hot zone again. Look at this. Wow, I didn't notice this before. So this is saying that over the last 8 quarters, on average, it's been up 18% in the 8 days after earnings. That's crazy talk. So, I like having those post-earnings averages there. With PLTR, this is just a massive momentum move. It's already made multiple targets. So at this point, you can't really use conservative targets or conservative entries. What it is a post-earnings move, and it's just a function of how far it's going to go. With these post-earnings moves, they're going to get some interest because everybody's looking at it after earnings, right? They had great numbers, great report, all that good stuff. So there is going to come a time where that interest is going to wane. It is not yet because it's up again today. At this point, I think that the $200 key psychological value is the most obvious target to use, just because I've already ran out of all of my other targets. And that's typically how these kind of stocks trade, is they trade to those key psychological value targets. So you could use 190 or you could use 200. I don't have like a squeeze that you could use, but you could use just, this pullback buy pattern. Not super strong pattern, just because I would prefer to have a squeeze. But let me see. Looks like we have a lot of open interest at 185. So if you wanted to do post-earnings continuation, I think you could use 190 for next week. So you could do 180, 190, 200. So this would be a $10 wide butterfly for $2.53, which is pretty similar to what I did in Hood, actually. So I meant to go over that trade. Let's look at that one. So I had placed a post-earnings trade in Hood because it had a daily squeeze. And again, you have this post earnings average up 8%, pretty good. So with all of that, I had placed this. Where's my butterfly? I placed this butterfly 105, 115, 125. So currently right now, Hood is at 110. So you're like right in the middle of the butterfly. It's up like 43%. So that is the exact kind of trade that you could do with any of these tickers that have already reported earnings. You basically just use the next price target, and you just set it up like as a post earnings trade. So let me see. We have NVIDIA 78-minute squeeze. I said I was going to come back to that one. Next target here, like I said, 190. Let me get back in that. Where is my saved trade? SPX is just not really doing anything. Come on. And then the earnings for today, let's see, team. This thing just keeps freezing when I'm in my options chain. Come on. Circle earnings next week. Thoughts on RGTI, QUBT as they're coming into earnings. Rocket Lab. Well, let me just go ahead and get into this one. So this was an NVIDIA trade that I went over earlier. I'm just basically doing a run into earnings in NVIDIA. 1 to 3 risk to reward. To open, this is a bullish run into earnings trade in NVIDIA with the 195-minute squeeze. My price target is 190. Note, I will be on vacation next week. No stop. All right, let me see if I can get any of the other ones quickly. RKLB. So a lot of these, I just didn't feel like there was a great pattern. With any of them, you can take your life into your hands and you can try to sell a neutral iron fly. I'm hesitant to do that on a lot of these that have earnings because they have short float. So, I mean, what you'll see with a lot of these is that they have just completely exploded over earnings. Like A-Lab, you can see it was up 21%. This one had short float. Today, it's losing momentum. Usually when that happens, I get out because what you want with one of these stocks that gaps up like this is you want it to keep going. You don't want it to gap up and then have an inside range candle and be down 2%. So for stuff like that, I usually get out of it. IonQ is not really helping the quantum space today because the earnings, the EPS numbers were worse than expected. That's really not what you want to see. This was a really bullish price pattern. Last quarter, they did really well over earnings. I would have liked to have seen that do a lot better, and then that would have helped these other quantum stocks. I think that RGTI looks great, but it's down today because you have IonQ down. I think that overall, RGTI looks really good. It has a weekly squeeze. They actually were profitable last quarter, which is really big. Typically with these kinds of stocks, you want to see them shift their overall fundamental story. So I did buy long-term shares in RGTI, and I still have some long calls in it too, and I'm still holding out for that one. But I just think that it's down today because of, you know, because of IonQ. TTD, I never trade this one over earnings. I think it's a massive pain. The reason why is because sometimes it moves 18%, sometimes it moves 2%, sometimes it's up, sometimes it's down. There's just no pattern at all. So there's just no sense in trading that one. This one I haven't traded for a long time either, but I did used to just sell neutral iron flies on it. I feel like if I was going to do anything, I would just sell the neutral iron fly. So the expected move on it is $5.34, which is about a 5% move. So you could probably make money selling the neutral iron fly, but I don't love doing that when there's a squeeze. So when there's a squeeze going into earnings, that's usually the time the stock's going to break out. So I just feel like there's just not a high probability move there. Tim, so this one is tomorrow. I mean, here's the thing. A lot of these names that are reporting, they have a lot of high implied volatility. So you can take your life into your hands and try to sell the at the money calls and puts, but I don't like doing that when there's a big squeeze, because that is when it could have just this massive move. And then if you look at it, it's like, well, I like the stock, but you can see that it's gapped down 4 quarters in a row. So then what are you going to do with it? Are you going to short it? Well, I know I wouldn't really want to short it. It has a 10% expected move, which is really high. So you could try to sell the implied volatility and see if you could buy it back, because, you might get lucky. You might get lucky, and it might end up being a situation where this quarter just doesn't move very much and you can take advantage of the vol crush. So that'll happen sometimes. I don't know what to do about, let's see. A lot of these, like, you just need to have a consistent trend, a consistent pattern, and a lot of them just don't have that is the issue. So like Rocket Lab, half the time it's up, half the time it's down. So what are you going to bet on? When you're in a situation where it's half the time up, half the time down, I normally will do a neutral iron fly. But I do not want to do that on something that has a lot of high short float, because it could easily go 20% against you. So I feel like a lot of these, sometimes it's just better to wait, because then you can get a good post earnings move, and it's going to be a lot more obvious what it's doing after earnings. If I have, a clean setup and I look at it and it's like, oh yeah, that's, like when we looked at app yesterday, it's like, well, this one's pretty obvious because it goes up after earnings every single quarter. Like, why not do that? But a lot of these where they just don't have a clean pattern, then I would just rather wait and see if there's a better opportunity after the report. For CELH, this one does have short float, 12% short float. So typically when you get a big gap up after earnings and something has short float, it can keep going. The main issue with this one is there's just a lot of overhead resistance. The short float tickers that do the best are going to be the ones that don't have all of this, and they're at the new highs. So you can try to continue trading that after earnings, but I would say it's not my favorite pattern. If you were going to do it, then I would say 55 is your next target. The S&P is finally starting to go, and the market's going to close in 30 seconds. UAA for a long-term play. Poke it with a stick. BA has a monthly squeeze. Nvidia's going. Am I worried app will go through 450? I mean, that's a possibility, but No, I'm not too worried about it. I mean, we'll just manage it tomorrow. The way that I place those butterflies, I mean, I place the butterflies based off of where the major resistance is. So in a perfect world, it trades up to it and it doesn't go through it. But I've been wrong before and I'll be wrong again. Let's see, monthly. Yeah, one has a monthly squeeze. I mean, Boeing has just been a huge pain for a long time. My other main criteria for buying long-term stock is like the company has to be profitable. Look at that. Losing money, losing money, losing money, losing money. And super inconsistent too. So, yes, you're right. It does have the monthly squeeze pattern, but another main criteria that I need to see is increasing EPS numbers. I also want to see increasing dividends if the company gives dividends. So it does have the monthly squeeze pattern, but it just doesn't really fit the rest of my criteria. 63.40 is the closing price. Ding, ding, ding. We finally got that move going higher at the end of the day, but it just did not. We still never got a bunch of bullish ticks. All right, let me see if I missed any questions. UAA. I mean, I can look and see if there's anything going on after the close, but I just did not see any good ones for an overnight earnings trade. In your NVIDIA trade, you have $2.58 LMT. What is the limit? So the LMT just means the limit price. So when I copy and paste the order before it's actually filled, it will say LMT. So that's just the price that I'm bidding. And then sometimes you get filled at like a little higher price or a little bit lower price. UAA. So this one has a pretty bearish monthly squeeze. You have your price underneath all the moving averages here. You have red candles. You have a downward trend. That one looks to me like it's going to continue heading lower. It's hard to short these things when they're like almost at zero, but you could at least trade it down into these previous lows, I would think. AAL weekly squeeze. You sold your SPX calls too soon at 110 and it ran to 5, LOL. Those last 5 minutes can really be a good opportunity if you can call it in the right direction. There just wasn't a whole lot going on. So that to me looks pretty bearish. You have a downward trend. You're stuck underneath all of your resistance zones. Daily chart's looking better. Head and shoulders. So that would be bearish if it breaks 10. But I think the monthly chart would ultimately prevail. I like Dell. Good stock, good long-term pick. Monthly squeeze. Boom. And it's a slingshot squeeze. So I like buying stocks like this. You have this nice little two-step pattern down into support. You have a nice shift, momentum shift. You have a volume shift. Let's see. Ooh, this one looks very good. Man, I wish I would have seen this one before the market closed. I know you told me like 3 times. I'm sorry. I had so many requests that I was trying to get through. I'm going to write this one on my whiteboard. See if I can buy it tomorrow. Um, let me write this on the whiteboard. So this one looks great. Daily squeeze, monthly squeeze. It looks good for a long-term stock pick because it's come down so much from the massive rally that it had, like what, last year? I feel like I've already repeated this a million times, but the long-term stock picks just work the absolute best with the monthly and weekly squeezes because that allows you to time them before they have those big breakouts, And the other thing that's great about the squeeze is you have this big pullback that usually occurs with the squeeze because the stock is pulling back and going into consolidation. So it gives you just a good entry with an edge on that long-term chart. Sorry, I'm trying to erase my whiteboard here so I can write this bad boy down. There are definitely companies that are reporting earnings at the end of the month that we can trade for these rallies going into these reports. And this looks like one of them. Yeah, like NVIDIA. Dell. This is why I love the trading room. Lots of ideas. Okay, so let's look at the hot zone. All right, so it looks like during the 21-day time frame over the last 2 years, it's traded higher by about 15%. That's really good. That's a high number right there. It's up 4.5% today. I didn't see what the news was on it, but you have a pretty clean price target at 145, I would say. 140 would be the easy target. 145 would be the higher price target. The only thing I don't love about this one is typically for a run into earnings, you want to see that the stock has recently had bullish moves after the report. I don't love this, so it's not 100% perfect. But what's interesting is that even though it has gapped down after earnings a couple quarters in a row, it's still rallying going into the report. So that's kind of weird. But I guess that means that investors are just forgiving whatever is causing it to do that. And then what's also interesting is it gapped lower even though it beat. So it's important to remember that the pre-earnings move is different than the actual earnings move. And you can trade the pre-earnings move and then just get out of it. And then if it gaps down after earnings, like who cares? You're just trading this move from here to there. So this one I think looks good for a long-term stock buy. Let me see here. Because it's cheaper, you could also just buy the long calls in the earnings series, like at the 135 strike. Yes, I'm still in hood. It's almost at my target. So the target is the center strike at 115. You're at 111.23. So, maybe I could take it off tomorrow. It's up 52%. All right. Does anybody see any big movers after the close yet? What about Upstart? I lost money on Upstart. That was a bummer. Upstart looked like a really good candidate for a potential overnight earnings trade. It was right near previous highs. It has high short float. It has a squeeze. And this thing just got hammered. So I tried to trade this one in a bullish way. Didn't work out. Lost money on it. At this point, I I don't know that there's much to do unless you want to trade the bullish move after earnings. I mean, I feel like it's holding really well at the 50 simple. Where am I going on vacation? I'm going to Kansas City, Missouri. That is where I'm from. And I'm going to visit my entire family and my grandma. I had a baby girl last year who was named after my grandma, and I'm taking her to meet her. She's almost 95. Yes, and I have a giant family. I'm not even sure how many cousins I have. I was trying to explain to my husband how many cousins I have and who's related to who, and I'm trying to make an entire list, but it was difficult to fill it out. Like, "Ah, this cousin, that cousin." Am I staying with my family? So my family of 5 was deemed too chaotic to stay with anyone, so we are gonna be staying in our own Airbnb. My mother was literally like, "I'm sorry, this is just gonna be too much for your grandma to handle." It's like, "Okay." Alright. I got it. 2 under 2. TTD getting hammered. Yeah, TTD is a huge pain. I never trade this one on earnings anymore. I have tickers that I trade over earnings, and I have tickers that I have learned, like, do not trade over earnings. And TTD is one of them. It's just like half the time it's up, half the time it's down. There's no pattern. When people say earnings trading, you can never know what's going to happen. Like, this is a perfect example. Because you had last quarter, great move, gap up, nice bullish trend. Boom, getting destroyed. Barbecue capital of the world. I personally think that Kansas City barbecue is way better than Texas barbecue, but I was also raised there, so that's why I like it better. Yeah, my husband does not agree with me either. It's okay. Your great grandmother lived to 97. Wow. Steakhouses, yes. I don't know that I'm going to be able to take the chaos into a steakhouse, but I want to go to 1587 Prime whenever it opens. All right. Well, I am going to be late to take my dogs to the vet, but this was fun hanging out with you guys. I hope that everybody has a great rest of your day. I'm still going to be here for a few days. I'm leaving next Wednesday, so I will still be here tomorrow, Monday, and Tuesday. All right. Well, let me know if you have any other questions. They have great wolf lodges all over. There's one in Kansas City.